Hello. In this video, I'm going to show you the basic functionalities of the LYNX trading platform. First of all, I'll start off with introducing myself. My name is Yuri Sleutel. I've been working for LYNX since 2012. In those years, I've been trading many products, stocks, options, future, forex, and often give presentations in Dutch for our clients about the platform or about day trading strategies or other subjects. But in this video, I'm going to talk to you about LYNX, about our trading platform, and I'm going to show you how you can do some basic stuff like place an order, and I'm going to show you this partly in the sheets, and in the end, I'm going to do some live trades, so you can really see how the platform works and how you can use some of the functions to do your trading. So first of all, LYNX now exists 10 years. We were founded in 2006 and now are active in several countries throughout Europe. So we started off in Netherlands, but now have offices in Belgium, Germany, Czech Republic, and also offer our services in a few other countries. Via LYNX you can trade in more than 24 countries, and you have access to over 100 different exchanges. You can trade stocks, options, futures, ETFs, forex, you name it. Most products are all available via LYNX, so you won't be limited product-wise. So why did 40,000 investors choose for LYNX? That's how many accounts we thus far opened. Well, we tend to have not one unique selling point, but several. So we are known for our very low trading fees. For instance, in the United States, you can buy stocks for only 1 cent per share. But also, just like as I mentioned, you have access to over 100 different exchanges throughout the whole world. So you can trade in Europe, America, Asia, but also in Australia. So if you, for instance, you find a Chinese stock that you think is worth buying, you can probably do it via LYNX. And last but not least is our professional trading platform, which you're also going to see in this presentation. The platform has been used many years. We won multiple awards, and it's just superior compared to the broker that you're maybe used to. So you'll see it in the professional tools we offer, the over 60 order types. We have more than 100 technical indicators, but you can also use some fundamental analysis. So there's something for every type of trader. In this video, I can't show you all of these functionalities. Then I think it would take about a month. But I'm going to show you the basics, so how to buy, what can you do in your platform. If you're interested in learning more, you can always contact us and we can show you more of our unique and superior trading platform. So if I talk about our trading platform, I'm mostly talking about our real software, which I'm only going to show you today. We also have LYNX Basic, which is more for when you're on the road or when you just want a very basic, simple overview of your trading. So that's our web trader, which is only available for clients of LYNX. But today we'll focus on the software. So if you use the LYNX Basic, but you're interested in the LYNX trading platform, then you're watching the right video. If you're only interested in LYNX Basic, well, then you can just turn it off and maybe watch another one. So this shot will show you kind of the basic feel you get when logging in for the first time in our trading platform. And as you probably will see directly, it is a completely different feel than other brokers. It looks kind of an Excel look. Everything in this platform you can change to your own preferences. And this may be a good point of getting the platform right away. So here you have the live feed of my platform at the moment. I don't know when you're watching this video, maybe the quotes have changed, but this is the Dow Jones at the moment. So we're slightly up, and everything, as I mentioned, you can change in this platform. So for instance, we will load in some of the exchanges we think investors will mostly use. So if I take a look at the platform here, you'll see that I have the Dow Jones, Nasdaq, Eurostoxx, all these different type of indices. But if you think I'm not really using one of them, you can always choose to delete them. So I can click on a tab. For instance, I'm from the Netherlands, so I sometimes trade on the AEX, say it in the Dutch way. But probably most of you, you know Unilever, you know Shell, but you're not interested in that. So you can just press the X and you can delete the whole tab. And it's gone. And so that way you can customize your platform to your own preferences. You can add whatever tab you want by clicking here. I will be using this unique tool to draw for you during this presentation. I must say, drawing was never my strong suit, so if you think, okay, you can do better, don't blame me. I hope my presentation is good enough that you will forgive me. But if I press on this plus sign, here you can add a tab, so you just have to enter a random name, so for instance ABC, and if I then click on enter, you'll see that I just created a new tab. And you can add your stocks, your options, or whatever in these tabs and create it for your own preference. Also, if you're not interested in specific stocks, for instance, if I'm here in the Euro stocks and you think, okay, this AXA stock, not interested, you can just click on it, get the delete button, and it's gone. That way you can just change everything and only see the stocks or the tabs that you're interested in for your trading, because there's so many stocks that you can be overwhelming for you as a trader. So if I go back to the sheets, so LYNX Basic, just so you get a quick overview, this is what LYNX Basic looks like compared to the normal trading platform. So you see this is probably more as what you're used to from your own broker. Just a simple web trader with some tools, with some, you can see some graphs, but it doesn't have the many functions that the other platform has that we use. So to start with the most important thing, how do you really create an order? Because you're opening an account with a broker, so probably you're thinking of buying a stock or an ETF or another product. Well, if you look in the sheet here, you'll see that I put Apple in the sheet, and you see the bid price, the ask price, the last price, and change whatever. If you want to create an order, you have two ways. You can click on the right button of your mouse, or you can click on the ask price. So when I do that, you'll see a row coming below your stock. And in this row, we'll fill in all the elements of our order. So here we'll fill in what we want to do, what we want, how many stocks do we want to buy? Do we want to buy or sell? What kind of type of order are we going to use? What duration and what price? So if you look in the chart, you already see some of these elements filled in. I'm going to show them one by one. So for instance, orders, I already mentioned you have over 60 different orders. I'm only going to discuss the basics that you probably also know from your own broker, and one of my own favorite orders. So it's the limit order, the market order, stop loss, and the trailing stop. The duration, so what can you choose from? There's also many different options, but most of you will probably use a day order. So the order is only valid for today, or good till cancel. So it's valid till you'll cancel it yourself. Or if you have a specific, so you want to buy an order until maybe it will come with their quarterly earnings, and if it's not bought by that point, you'll cancel your order, then you use a good till date. There's several more options, and if you're interested in this, you can always read our manual. But to start with, the most commonly used order with our clients is the limit order. And with the limit order, we're basically saying, okay, I want to pay this price, but not a penny more. So here in this example, if you look, I filled in Unilever, or I've created a buy order on Unilever, and I'll go through it. You'll see it's a day order. I want to pay 39 euros and 65 cents. So here, by the way, you see it's Unilever. This is the ticker symbol. At that moment, there were people willing to buy for 39.68 and willing to sell for 39.69. So at that moment, I was not the best bidder. 100 shares I want to buy, currency is euros. This would give you this total order. So about 4,000 euros. And as you see, it's a limit order. So at this moment, I would just have to wait till the price would go down and reach this price of 39.65. You see this is an active order, and how do you recognize this? Well, it shows you this C, and the C stands for cancel. So if I would press the C, the order would instantly be cancelled. So we're at the moment we would be waiting until the price drops, hopefully to 39.65, and at that point we would get our order execution. So that also happened, and I think I didn't even have to change the price for that. It was also executed at 39.65. You see that here. Now I want to buy 0 stocks because 100 were filled, and you see here that 100 in black shows you that the order was filled for 100 stocks. A few things changed in this row. So if you look with me, you see that now next to Unilever you see 100. So that's my position because I was buying 100 shares. You'll see a -4. Well, how can that be? Well, the price of course could have gone down, but that's not the case, because if I look at my average price, where I bought for, it's 39.71. And even though I just said to you, I don't want to get a higher price than 39.65, here I see a higher average price. The reason is we always calculate the commission in the average price. So when you buy when you did this transaction, you pay about €6 for the order, and you need to earn back that €6 to make a profit. So our system will calculate the commission when buying. The trading fees will be included in the average price, and we need to go above this 39.71. And this is an easy way for you to see that the order is filled, because you'll see a big blue number, and hopefully also not a red negative amount that I have here of €4. Another way you can recognize it is the trade log that will blink. It will be in the left top of your platform, and if you click there, you'll see your trades of today or the last 7 days. And here again, you can see that I bought 100 shares of Unilever for that price of 39.65. The commission I paid, and also what time and on what exchange this happens. A different order, also commonly used, is a market order. And with this order, you're saying, I really want to buy for the first price in the market. So if we take a look at the sheet, you'll see that here I created an order on BMW saying I want to buy 100 shares market. Well, what is market? It's the first price in the market. So if I look at the sheets here, you'll see that it's 75.71. So for that 75.71 is the ask price. So that price, ask price, is for that price people are willing to sell. 274 shares on that price. I only want to buy 100. So if I would press on transmit here, then I would get the shares of BMW for that price. I always want to advise you to be careful with the market order, because the market order, you say the first price in the market, and as you can see with this order, will be no problem. You get the shares on approximately the market price. But if you have an illiquid stock, you'll get maybe 10 shares on the first ask price, then maybe 10 cents higher in other parts. So be aware of when you're using the market order. It's a great way to enter or exit the market really rapidly if you don't really care about maybe a penny difference. But if you do an illiquid stock, then it could have big consequences that you don't want to have. So always try to think of this. Stop loss. Sometimes it's being forget by investors, but I think it's one of the most important orders to be successful in the long term. You basically want to protect your position. So here I got my example of Unilever, and I bought those shares, and now I want to be protected when the stock drops, because maybe you have a goal. You think, okay, the stock can go up €20 because Unilever sold much ice creams this last summer because it was nice weather. But if the stock drops and your prediction doesn't come true, you don't want to be stuck in a losing stock. So try to think before entering the position, what is going to be my target and what's going to be my points that I want to get out of my position. So in this case, you see I created a stop order and I filled in a price of 38.50. And once the stock hits 38.50, I would sell my position, or I would sell my 100 shares of Unilever in this case. And how does this order work? So once there is traded on 38.50 or below, my order will be sent market to the stock markets. So that means if the price drops and only one stock is traded on 38.50, my 100 shares would be sold instantly. So it's a great protection, but again, it's a market order. So also try to think of with what stock you're doing this. And it is not a guarantee that you get that 38.50. For instance, now if we have quarterly earnings and you'll have a stop loss, but the company will come with earnings before the market opens, it opens 10% lower, let's say on 38, yeah, then the first trade will be on 38, I have my stop on 38.50. It will be triggered because there will be traded below that price that I have filled in. Me and probably thousands of other investors would sell market our position. So you would see a big spike downwards. So think of it's not a guarantee. So try also, if you have a bad feeling about earnings, maybe cancel your stop, or maybe even better, close your position if you have a bad feeling about your position. But do try to use it. Too often I see investors, or even myself, not protecting a position, and yeah, you'll have a big loss when it's not really necessary because you had a completely different plan. And here for an example, for instance, you see this beautiful upward pattern of Tesla, and at one point it's over and you see the price dropping, and if you have already enjoyed that whole ride up, then at one point it would be wise to use your stop and maybe say, okay, when the price moves down, so we're going up here, up, and if you're here, you think, okay, we went above these points, again, not a really nice line, but you understand the point, I guess, you'll place your stop maybe here. So when we drop back to this level, or maybe a bit below, I want to sell. And if you don't do that, you see the price will go down, and well, it didn't go down too much, but still it's a waste. And it's still $65 on your position. And you see many different examples. I chose Tesla, which is not still terrible, even for instance, if you got in around 150. But yeah, if you got in around 260, then it's a big loss on your portfolio, which you probably don't want to have. Then my personal favorite order type, especially when I don't have time to watch the screen, so when you're, for instance, on holiday, I choose to use the trailing stop. And trailing stop is nothing different than a stop loss that moves up with your stock. So I fill in a percentage or an amount for which I want my stop loss to be triggered, calculated from the highest price. So to keep it very simple, and I'll use a fixed amount, if a stock is now trading at 10, and I'll fill in a trail of 1, at that point my stop will be at 9, because 10 minus 1 is 9. No rocket science. When the stock goes up, for instance to 15, my stop loss goes up with my stock. We go to 14. And if the stock then goes down a bit to 14.50, nothing happens. My stop is still at 14. Stock goes up again to 20. My stop will be at 19. So this is a great way to enjoy the big rides on a stock. So if we go back to this Tesla example, if you were in your position around that great level of, 150, and you place your trailing stop, it would have just gone up with your stock. And of course, if you see here a bit of a drop, you see here, for instance, a big drop, here is all quite, there's some selling pressure, but you're able to take profit of this strong movement. And if you're, for instance, on holiday and you have this order type in place, you could have profited from this whole ride up. We go down, you're out, and without even being behind the screen. So it's it's my favorite way of when you're not around, able to enjoy a strong price movement. One thing that's important to realize, also with the stop loss, always use a good till cancel order. So it's not only valid for 1 day, but till you cancel it yourself. And of course, try to realize how big you want to have that trailing amount. If I would do $1 on Tesla here, that's of course nothing. So try to realize what is your own game plan, and based on that you can decide if this is a percentage. I know a lot of clients who automatically always say, I want to lose a max of 10% on my position, use a trail of 10%, and you're set to go up, if the market goes up, of course. Thus far, I only showed you examples with real-time data. You have a choice if you take real-time data or delayed data. Here, you probably already see a bit of a difference. Here in the sheet, you see I have the Hang Seng, which is the stock exchange in Hong Kong. Most of the time, when Hong Kong is open, I'll be sleeping, so I don't really need the real-time data for that market. You recognize that it's delayed by the brownish, yellowish glow over the stocks, and well, another big point is the D standing for the last price, which stands for delayed. One big difference when you place an order, so I could use again that right button of my mouse or click on the ask price. I would not get a nice order line like here, but it would be a little pop-up. In this pop-up you can fill in the exact same information. So how many stocks do you want to buy, what price, what order type, etc. Even you can fill in even more in this screen. But it's a bit different, and if you filled in everything that you want, you'll click on transmit and will be transmitted to the stock exchange. Okay, so that's, I guess, part of the sheets, which I always think is the most boring part. So now I really show you in the platform how it would work. So let's do some live trading. I'll get my platform and we'll move back to the US. So you see here the price movement of today. We're up a little bit, some stocks are down. You see IBM, they came with quarterly earnings last night and they're down a bit, for instance almost 4%. So Warren Buffett is probably not too happy with that as a large shareholder. So, okay, how did we create this order? If we want to do one, so for instance on Caterpillar, you see that here, this share, I had two options. So I could use the right button of my mouse or click on the ask price. The ask price, if you don't know where it is, always look to the top of your platform and you'll find the description. So if I would go down, I see here, this is the ask price. I click on the 87.01 and I get this new row that we talked about earlier. So this is also real-time data, what you see here. I can fill in, what do I want to buy? Or do I want to buy at all? Do I maybe want to sell? Is the day order or good to cancel or something else? How many shares do you want to buy? Well, now every time we had 100, but it's easy to change. So for instance, if you want 90, you type in 90. If you want 100, well, you just leave it like that. What type of order would you like to use? Limit, market, stop. You'll see there are a lot of them, and these are not even all possibilities you could use. For now, we'll use the limit, and I'll lower the price a bit because I don't want to have my order filled right away. So I'll change it to 86.95. And now I can click on the T, which stands for transmit. Once I click on that, you'll get a screen which you can still take a look at what you're really doing. It's kind of also kind of extra security because you see, okay, what stock am I buying, for what price, what's the commission I'm paying, what's the effect on my margin. So if we take a look at the screen, you'll see, okay, yes, we wanted to buy Caterpillar, 100 shares, a limit for this price, time in force day, and you'll see the effect on my account. Paying $5 in commission on the US, we have a minimum of $5, so it's 100 shares times 1 penny. It would be $1, but there's a minimum of 5. I now click on transmit, and the order is now active. And you can see that again by this cancel button I could click. Yeah, but we don't want to do that, of course. So order is now active, and I don't really want to wait with you till the order is filled, and the price is slightly above the price that I want to buy. So what we can do is increase our price. So normally I would recommend you to wait until the order is filled, or to have a little bit patience, because buying for a lower price is your first profit, I guess. But in this case, I'll just change the price. So I can click in the field where I just entered the price and change it to whatever I want. For instance, to 87.02, which is also the bid price at this moment. I click on enter, and the whole order line changed color. And that shows you you made a change, and this change is not valid right away, but you still need to accept it. And how do you update or accept it? You click on the U, which stands for update. So if I want to click on the U, and the order was filled right away. So you saw how fast that was. I clicked, and within a few milliseconds you had your position of 100 shares. And here in the platform you can see that it was filled. You see the trade log on the top right also blinking. And you see that I paid, including commission, 87.06. But that's also good to see. Here it's 87.01. I filled in that I want to buy with a limit for 87.02. With the limit, you say I want to pay a maximum of this price. If the price is lower, then we will still give you that lower price, of course. So in that case, there was a penny better price at that moment, and that's why I got my order filled for this price. And you see on which exchanges it was filled. Yeah, again, the basic info that you want to see when you filled your order. So now, you see we already went up a few pennies, so my loss is already becoming smaller. I want to protect my position, create the stop loss. So how did I do that? I have to create an order, which I could do with either the right button of my mouse, and I could click buy or sell, or even close if you want to close the position. Or I could click on the ask price if I want to buy. But if you want to sell, you could choose for the bid price, because then you'll create the opposite order. If I would have clicked on the ask price, no problem at all. Click here on buy, and you change it to sell. Yeah, now it's maybe a bit confusing because you'll see two order lines. Maybe you click twice once. It's very easy to delete one. Click on the order and delete, and it is gone. Or right button of your cursor and click on discard. Okay, so we want to place a stop. So first thing I guess we have to do is change the limit to stop. And then we want the order to be valid for more than 1 day. So we change day to good till cancel. The quantity we have is 100. Please always check the quantity. The standard number we fill in our system is 100. But if you have a position of, for instance, 50 or 150 and you create this standard order, it will always show 100. And that doesn't match your own position. Our system won't tell you, okay, sir, are you sure you want to do this because you'll be short in the stock, or maybe you'll have 50 shares left. So please always check it. So in this case, it matches my position. I do have to change my price, which is higher than the current price, which of course I don't want. So I'll change it, for instance, to 83 or whatever. I wanted to click 86 actually. So now I calculate, well, I lose approximately $100 if this happens. If you think this is okay, click again on transmit, and here transmit again, and the order is valid. You'll see that the order has a slightly different color. I won't get into that, but you'll see the C, which again stands for cancel. So now I can sleep without any pain in my stomach and think of the chance that maybe Caterpillar will crash next day and I'll have a big loss. I now am protected for a quick drop in the prices and would lose about $100. One thing that many traders also use are the charts. So if I would now say, hey, I want to check the chart of Caterpillar, is what I'm doing, is it actually right? I actually have no idea because I don't really follow Caterpillar, so I'm a bit curious, to be honest. If I want to get a chart, I click on again, with the right button of my mouse, right click on the stock, charts, and I click on new charts. And instantly we get a graph of a year. If you want to see different periods, you can change it here. If you want to see a month or whatever, you can just fill it in. But for now, I guess the year chart is okay. I can make it smaller, bigger, whatever you want. And you see here the development of the price of Caterpillar. And you see on the top, that's actually where we bought, so almost at the high of the year, you see this green line. And the green line is it shows you the price that we bought the shares. That's not the only line you can see here. If you look closely in the charts, you'll also see a red line. And this red line shows you our stop that we have created. So you can easily see, okay, are these levels okay? Is this stop maybe now a little bit close to the entry if you look at the development the stock had the past year? So you could also actually decide to place your stop right in this chart. So I could cancel this order by clicking here on, I'll show it for you. Here on the top left you'll see my stop, and there's also a CXL. Well, that again stands for cancel. Click on it and I no longer have the stop loss in place. Now on the top right you'll see the buy and sell buttons. You can click those, or again use the right button of your mouse and click on sell, and you can fill in the price, or even easier maybe, move the line with your mouse to a level that you think, okay, if the price goes below this level, I want to exit because we see some support or resistance there. So if the price breaks this level, then we really need to exit our position. And you only have to click on transmit here to execute the order, or here you see a T, which you probably recognize from the other screen. So this is a really nice feature. You can trade in the graphs or in the charts. So if you're an active trader or if you believe in technical analysis, this is a great tool that you could use. And speaking of technical analysis, I already mentioned the 100 different technical indicators that you could use. So how do you get one of those in your charts? Well, it's again, it's not rocket science. It's very easy. We right click in the chart, add study, and you can choose for which one. There are so many, you see, but you can also just search for them, all studies, and type in which one you want. Is that the relative strength index? That is the RSI. Or is that the Bollinger Band? Click on OK, and now we get a completely different view of our chart. Remove volume, and now you can still take a look, make your analysis. Do you have a buy or a sell signal, and place your order in the chart again. So you don't have to go back to your old screen, try to remember the price that you saw in the chart or write it down somewhere. Just make it very easy. With us you can do it in the chart. Okay, let's go back and buy something else, because I already told you, before buying a stock, you need to have a plan. So you want to have a price that you enter, of course, but you need to have a plan of when to exit. So where's your stop, where's your target. These other levels you can fill in right away when you're buying. So if I would create a new order on, for instance, Coca-Cola, first I click on the ask price. Then normally we would now fill in everything and submit the order or transmit the order. Now we want to give the other conditions, attach it to the order. So we want to attach our stop and our target right away, so we don't have to do it afterwards. So what we do, it's very easy. Again, you're probably already guessing it. We'll use the right button and we'll go to attach, and you see several orders. You can do only the stop, you can do only the targets, but I'm going to choose for a bracket order. And a bracket order gives you then a lower band, a higher band, where you want to exit your stop and your targets. In the platform, you'll see 3 order lines that you can fill in before buying. So you can really make sure you're on your own rules. So you'll follow your own rules, I must say. If we fill in the prices, we'll have a limit. Standard now it's $1 above the price. A stop is now maybe a bit too low. We'll change that to 40. But if I would now click on transmit, and forgetting one thing, limit and stop, we don't want to have that valid for 1 day. We want to have that valid for forever, or till we cancel it ourselves. And now when we click on T, we get a much bigger screen. And in this screen we can read all the info that we just filled in. So for what price are we buying? When do we want to sell with a profit? And when do we want to sell with a loss? So if we take a look at the screen, you'll see it's a bit bigger. I think I did it properly, so I'll just click on transmit. And the order is now active on the stock exchange. And you see this order has a green one. It's active. This one is being guarded. It's not sent yet. It will be sent once the first order has been, or the primary order has been filled. So we have to wait till Coca-Cola goes down about 1 or 2 cents. And then those other 2 orders will be active. And, well, I heard a ping sound behind me. That means that our order is filled. And now if we take a look, you see the color changed. There's no longer red. They're green and blue, colors that I like, because it makes me think of a profit. Unfortunately, our positions are not showing a profit yet, but they will come. Now we are sure once the stock goes up to 42.83, we'll exit. And when the stock goes down, and I have to take a look at the screen, that's 40, then we'll also exit our position. But maybe if you're thinking a bit through what happens if the stock goes to that 42.83, then we're selling 100 position or 100 shares, Coca-Cola. But then we still have that 100 shares, or that sell order for 100 on the bottom for 40. The good thing, these orders are linked. So if one of them is filled, the other one gets cancelled. So you're sure that you won't be short 100 stocks of Coca-Cola, because when it would go up to 42.83, we would sell our 100 shares, would have a position of 0. Prices are dropping, would go to that 40. Hey, and then we still have that order in place. Then we would be short 100 shares, which is of course nice. When the market drops more, then we would be very happy. But there's also a chance the market would go up again. So with LYNX, you have the opportunity to go short, but with the bracket order, you don't have to be worried that you're going to be short, because the orders are linked to each other. And if one gets filled, the other will be cancelled. And I can show you what happens if I cancel one of them. The other should be cancelled as well, if I did everything correctly, of course. And good thing I did, because I have to start over with the whole video again now, otherwise. But you see, everything went okay. I'm going to put in new protection after this is finished, of course. But it's a very easy way to make sure you follow your own rules. So I think with this I showed you some of the basic features of the platform. You've seen how easy it is to buy. Only you can do it in 2 clicks. You can do it in your charts, looking at 100 different technical indicators. You can use many different order types. I showed you the basic, but there's much more. So if you want to learn more, just contact us and we'll take the time to show you through the platform. And I hope you learned a lot today and that you could use our platform easily in the future. I want to thank you all for watching, and I'll see you next time.